Buying versus renting. It's something that no matter what city you're in or what locale you're in, you have an opinion on, or most of you do anyway. And there's reasons to rent and there are reasons to buy. Just the same as for investors, there are reasons to have revenue properties. There are also reasons not to. Let's get into some of those reasons coming up. Oh, and be sure to stick around to the end of the video because there's one particular point that people are starting to talk about and I've been thinking about for the last few years that is going to come into play that might throw a wild card into everything, buying and renting in Calgary. For those of you that are new to the channel, I'm realjtincher. I'm a real estate agent here in Calgary, Alberta, Canada. I have connections across this great nation and in North America for that matter. And if you like videos like this and learning more, I'd love for you to subscribe to the channel, leave a comment, let's get a conversation going. And if you want to go more in depth, there's a Calendly link below. You can book a call with me. Let's have a chat a little bit more about anything that's on your mind about the real estate market, especially locally here in Alberta. So let's start with the rental side of the equation. In Calgary right now, according to the site zumper.com, your average apartment rental is approximately $2,005 per month right now. Now, if you go into the one bedroom, it's about $1,898, so $1,898 per month. And for a two bedroom, you're averaging about $2,365 per month. They also say that if you're in a detached house, you're looking at about $2,300 on average per month. Now, I find that a bit interesting because it definitely depends on which neighborhood you're in. Of course, you know, if you've got the whole basement to yourself, or if you've got, say, 2 or 3 floors just to yourself, that number is going to vary. It certainly can be more expensive than that in some instances. So for the investors out there, and those people that are moving here from Ontario and BC in droves, okay, I'm a little bit dramatic, but you are moving here a lot, keep that in mind. So if you're thinking of buying, for example, and you want to get a short-term rental, those are your monthly costs right now that you're going to have to factor in while you take 3, 6, maybe even 12 months before you finally find that dream home of yours and you can get into it. So those are the costs that you're going to have to incur. Sure, is it cheaper than Vancouver and Toronto? For the most part, absolutely. But the rental prices have crept up here, so it's something to keep in mind. On that note as well, with first-time buyers and move-up buyers, is it enough with these interest rate changes lately for you to say, okay, if I'm paying on average $2,005 per month for my apartment condo rental, and in some cases when it's 2 bedroom, even more than that, versus a mortgage payment at 4.75 or 4.5% on a fixed rate for the right price, is it worth doing? Because on the one hand, with a condo and a rental, you're not having any of the other costs associated with maintenance, condo fees, strata fees, and that kind of things. On the flip side, if you want to get into something or you're already into something and looking to move up, what are those costs on top of the average mortgage payment or your own mortgage payment that you're going to have to consider? Does it make more sense to stay put in that rental, or does it make more sense to be in something that is accruing value over time within the right reasons for you as well? Now, big shocker here. I know there are some of you that say, hey, I don't want those extra expenses. I don't want the property taxes to pay. I don't want the condo fees to pay because I'm trying to save up for a down payment on a property anyway. So for now, rental makes sense, even with the more recent price hikes on the rental side. I do know personally that I have one client, well, several clients actually, that have said I've raised the rent, not so much because A, I can, but B, because I have to. My mortgage rates have gone up so much lately in the past 1 or 2 years. And that was, you know, as we had higher interest rates, they're easing slightly, depending on if you're on a fixed rate or a variable rate especially. But if they've incurred the cost, they're passing it down to the rental consumer. So for a lot of you, you've gotten fed up and said, well, that's not fair. We're getting way too priced out. What do we do now? And for others, they're fighting back and saying, okay, well, where are we supposed to go? If the landlord has said we're going to eventually move you out of here because I'm going to sell the property, or I'm going to move in myself, or I'm going to move my family in. The question is, where do you go? And do you get something better for your dollar looking in another community, another satellite community? Is that something that you can factor into your lifestyle with regards to your own commute, whether it's by bike, whether it's by car, whether it's running, skateboarding, you name it? Those kind of things are super important to consider. On the flip side, if you're comfortable enough to keep paying that rent, even if it goes up slightly or dramatically, and you're still able to sock some money away, which is not easy to do in these days of inflation, these times of more expensive things and items and lifestyle, if you will, it's that decision that you have to make for yourself. Something else on the rental side that not everyone is talking about is now we're seeing this easing of inventory stress in Calgary. Right now, it's just over the $600,000 price point mark. We're seeing more come to market. So where does that leave you if you're on the rental side of things? Everything is still really competitive in Calgary right now, especially on the condo side, in between that 250,000 to, let's call it, 550 mark, with everything from condos to townhouses up to single family detached, if you can even get one somewhere decent for 550 or less. Now, on the other side of things, if more inventory starts to creep in and we have this lowering of interest rates slightly, does it then make it easier to compete and not pay miles above or an exorbitant amount above list price for a property? So what that means is if you're not in more competition now, you can get into something that makes more sense for a price that works for you, that is not crazy above market value, then perhaps now is the time. I do believe we'll see this shift as interest rates kind of come down and stay where they are now, or come down even further. There will be some more this fall competition with buyers looking at places that are you're not competing with 30 offers. So there's going to be deals to be had. I don't think it's going to be frenzied like it was in the winter and spring of this year. However, keep in mind that does it make sense then to go from that comfortable rental payment that you're paying, not so comfortable for some, but in some cases, it is enough right now to not justify what they'd be paying at a higher interest rate, 4% and above, for a mortgage payment on something that they feel is already priced beyond their pre-approval amount or beyond their limit. On the buying side of the equation, does it make sense to buy a property in Calgary right now and the rest of 2024? Our benchmark price currently hovers around the $606,000 mark. Our federal government finally decided a couple times to change the Bank of Canada rate such that we're around that 4.5% prime rate now. So depending on what you can do with your mortgage broker and your mortgage product, and then figuring out exactly how much borrowing power you have at that new rate, does it make sense? Well, of course, it always depends on what your threshold is. Lots of comments, lots of debates, conversations about, well, okay, you're just a real estate agent and you're just always pushing the FOMO and you need to get into something now. Maybe yes, maybe no. It's part of my business. It's what I do for the right reasons. But you also have to consider too that time after time after time, I have told my own clients, and I will continue to say this, is it in your budget? Can you comfortably do this, make that buying decision, and make that purchase within the realm of your financial capability? And if the answer is yes, if you've crunched all the numbers, you're not doing the crazy things like all the memes that you've seen, going and buying a bunch of fancy cars and spending a ton before you actually take possession. If you're not going to the very end of your pre-approval budget, such that you're not squeaking by or living with no furniture in the house because you're house poor, then it is possible to do so. And there are people, I have many clients, I know many agents who have clients in the same boat that did take the risk, and it is a risk. You roll that dice, but they bought in 2020, they bought in 2021, they bought in 2022, and they've made a lot of equity. Their property has gone up in value quite a bit. Caveat, yes, I know there are people out there that will say yes, but until you sell it, you don't get that equity, and I understand that. But if this is a buy and hold strategy, which it should be, whether you're an investor or whether you're actually buying as a first-time home buyer, a move-up buyer, and even if you're on the luxury side of things, this should be a situation where you're saying, okay, if the interest rates are lower and they stay lower now, they're not going to be crazy low like they were back in the late 2000s with that 1.5% to 2% rate. Is it something that makes sense to do right now because I'm paying a prime amount, I'm paying a lot, or premium, if you will, for rent for the same product right now, and it's not something that I can have as my asset going forward? It totally depends on what your comfort level is. But like I always say, if you were pre-approved to $700,000, try and shop in that $600,000 or $500,000 limit, or that amount, sorry, so that you can say, okay, I've got some cushion here. I know what the mortgage payments are going to be per month. I can budget for it if there's some changes in the Bank of Canada and what the feds do, and then what my own lender does. And then if you're getting into a product, really important, of course, to decide, especially now still, is a variable rate the way to go, or is it a fixed product? Talk to your mortgage broker, talk to your mortgage associate that you trust so that you get the best advice on that and you have that comfort going forward. Because for some of you, it really is. Rental will be the way to go until the cows come home. Rental will be the way to go for that interim when you're moving provinces. If you can get into something and find something in this tight market, it bridges the gap for sure. If you've already budgeted for that, that's great. But on the buying side, when we're at 24 days on market on average now, so that's eased a bit. We're starting to see a bit more inventory come to the market. We're starting to see some easing in prices above $600,000 as well. So now might be a great time because there is this lull. In the summer slowdown, there is this lull where buyers have taken a break or they're away. Come fall, it will probably be business as usual again. And if there's another rate change and it goes down slightly more, people's borrowing power goes further. People jump off the fence and they're saying, now I can get into that market, but you're competing again. What does that look like? What does that mean for you as a buyer? Can you gain as much equity over time? Is it something that you can be comfortable doing? One thing I will definitely be watching, as many of you should be and will be too, is what's going to happen in 2025 and 2026 when a lot of these 5-year products, I'm one of them where my wife and I got in at a super amazing rate on our house that we're currently in now, and we renew in 2026. We've already been budgeting for that so that we're not going to have a payment shock if interest rates are still at 4.5% or 5%, or who knows where they'll be in 2 years. But what I'm thinking of right now is when some of these products come up for renewal, what does that mean for you as a buyer? And what does that mean for people that will be suddenly looking to get into the rental market if they need to get out of the home that they're already in? Hopefully, they'll still be in a position that if they have to sell it, the market's strong. But for buyers, will there be some deals to be had? And thus, do you rent for that extra year or two until there's deals to be had? Will prices change enough that if there are deals to be had, they won't be in 2 years because, well, you rented, but the prices went up enough that it kind of was a wash? That will be super interesting to watch as we go forward. The old adage is out there, at least it's something that I've come to believe, is within any interest rate changes, usually about a 3 minimum, but a 6 month to a year lag to see what the market, especially in Calgary, really does. Yeah, there's variations to that, and I understand that. But I'm going to be definitely interested in seeing what happens with people that basically have to hand their keys back, which is an awful situation to be in if that's the case. And another thing that I've already talked about with some is I do wonder if lenders will suddenly be like, we have a lot of these coming up for renewal. We don't want to lose them as clients. Are we going to change the grace period for how long you have to get your you-know-what in a row and be able to make these payments? And if not, will there be fire sales? Will there be enough of those sales and people in those situations that it actually changes the pricing in a community? Now, I know that's forward thinking, it's down the road, but many of us should be thinking about that right now. And for investors and people that are in those rental situations that maybe don't want to deal with any of that because they prefer to be in the rental, just something to consider. Food for thought. So those are some of my thoughts when it comes to renting versus buying. They're not your thoughts, but let me know what you think anyway. Let's get a dialogue going. Always great to have you along for the ride on this channel.